Welcome back, Bullish Bears. I'm going to put together a video to explain a strategy I've been having really good returns with. Um, it's referred to as a swap strategy by most. I call it a conversion strategy because I'm literally taking one option strategy and converting it into another strategy. The way it works is I can take an existing position and simply add on to that position in order to convert it into a different strategy. Let me explain. So I'm going to work with call debit spreads that I actually have opened and am having great times with. So I happen to in particular have a 240-245 spread with June 16th expiration open. I purchased these for 4 cents a piece. They're a $5 wide spread, just a vertical. And what I did is I went ahead and converted to a butterfly by selling a 245-250 credit spread against it. So today I was able to buy back that current spread after holding it overnight for just a little while ago. I bought this back for 12 cents. The previous day I sold it for 22 cents. Now that is a $10 return on a investment that I had risked 4 cents on. Pretty damn good. So I was able to convert this from a debit spread into a butterfly and then back into a debit spread overnight. So I literally swing traded a credit spread leveraged against a debit spread. Kind of interesting concept, but when you think about it, it literally shares the same short leg and just converts it into a butterfly. The idea is to swing trade these overnight while still maintaining a long position. And if the stock price continues to run in a bullish trend, I can have a really good chance at staying in that position with an even greater return in the long run if I get stuck to where I cannot buy back the credit spread for less than I sold it for. On the other hand, if I can continue rotating these and I happen to catch that explosive move just before it goes up to or close to my strike price, I can capture a massive percentage of return simply by converting it into a butterfly. And that way, instead of closing my position, I maintain a position that can earn a heck of a lot more while still capturing the profit within it. Because as long as it's a butterfly and as long as it is considered opened for a net credit, it cannot lose. It will not lose the credit that I obtained less the premium that I paid. So effectively, I paid 4 cents a piece for these, sold that credit spread for 22 cents, and if I would have just held on to that, my cost basis or my risk involved is just, well, actually negative 18 cents. I am literally being paid 18 cents to hold that position no matter what happens. So I cannot lose that. So it's a pretty neat little strategy, and it works out really well when you can repeat the process over and over and over again. This is currently my 5th time rotating this credit spread, and I have generated more than 20 times my risk. I have generated enough to cover my 4 cent risk 20 times over in this rotation, and I still have a position on. So I can ride this till probably the last week until expiration. So probably in a week and a half or so, I can completely close this position, take profit on it at any time, or I can just leave it alone as a butterfly and let it expire. If it expires worthless, cool. If it goes to where the share price is at the center of that butterfly or at the short legs of that butterfly at expiration or about an hour before it expires or before the end of the day, I could take almost the entire width of that spread, meaning I could take almost a $500 per contract set return on a $4 risk. That's incredible. So just kind of one of these strategies I've been working with, and man, it is just really fruitful. It can be used for ETFs and indexes, although it's nowhere near as efficient. It's best applied to single equities that have really good options, liquidity, and well, volatility to boot. So you got to have some price movement, and you got to have some serious options trading in that. You got to have plenty of open interest. And if you look at the open interest, I'm kind of well within the reason of open interest in this particular slot. You can see that it's in excess of 2,000 contracts. No problem getting in and out of those positions. If you were to run this on the fringe a little too far out, you might have an issue with liquidity. I wouldn't want to trade this anyway because the movement on it is very minimal. But just to think that when I entered my position, it was 4 cents, and all share price had to do was move a few dollars towards me, and I made it into a massive profit. Anyway, that's it for now. Thanks for tuning in. We'll see you next time.